Welcome back to the Farm Show on Westplex Talk 1045, broadcasting to St. Charles County, Franklin County, Eastern Warren County, and West St. Louis County. If you're into call letters, we are KSLQ. This week, we're focusing on two major publicly traded companies. Usually here on the Farm Show, we talk about the people and the productivity and the policy and the profits. We're really focusing on profits and money this week. In our first two segments, we talked about Corteva, soon to become two standalone companies, and we played select highlights from their Q4 2025 earnings call. Right here in our third segment, which we call C Block, we're going to do the same thing with FMC, the venerated crop protection company. They held a very special earnings call on Thursday. And when I say very special, it was a little bit emotional. It was a little bit gloomy, to be honest. We're going to head straight into that call and play a few select highlights from the prepared remarks and then also from the Q&A. It's a good time to remind you, as we did in our first and second segments today, that all the information from this conference call is provided for information and entertainment purposes only, and nothing we talk about should be construed in any way as financial advice. Let's get right into it. CEO Pierre Brondeau, lead us off.
Last night, FMC announced our fourth quarter and full year 2025 results, as well as our 2026 priorities. Importantly, we also announced that our board of directors has authorized exploring strategic options, including, but not limited to, a potential sale of the company.
Okay, wow, that didn't disappoint in terms of big news. Okay, Pierre, I feel like the tone of this call is going to be major. Let's keep going.
To strengthen our business and position ourselves for success, we are laser focused on executing our operational priorities in 2026. Those include strengthening the balance sheet, improving the competitiveness of our core portfolio, managing our post-patent Rynaxypyr strategy, and driving growth over new active ingredients. In parallel, the company is working to evaluate the best path forward for the benefit of the business and to maximize shareholder value. Accordingly, the board of directors has decided that a formal proactive process to evaluate strategic options makes sense to undertake at this time. The strategic review is at a preliminary stage. We have retained financial and legal advisors to assist us with this process. This strategic review does not impact the process underway to sell our India commercial business. As we look ahead, we are committed to position FMC for long-term success, and that starts with working toward our 2026 priorities as laid out on slide 4.
Okay, Pierre talked for a while longer and went through some numbers and such. And then he turned the call over to Andrew Sandifer, who's the Executive Vice President and Chief Financial Officer. And I'll play a quick clip. He explained the pressures the company faced this past year and continues to face going forward.
I'll start this morning with a brief overview of our fourth quarter results. Let me note that you can find more detailed description of our fourth quarter and full year 2025 results on slides 12 through 18 of today's presentation. During the fourth quarter, we continued to operate in challenging market conditions, including intense competition from generics and weaker grower margins. These conditions affected the timing of purchases and product mix for crop protection. While we delivered adjusted EBITDA and adjusted EPS near our guidance midpoints, sales came in below our guidance range. We reported $1.08 billion in Q4 sales, a decline of 11% year over year, or 5% on a like-for-like basis excluding India. Price declined 6%, driven by lower Rynaxypyr and strong market competition, particularly in Latin America, which led to pricing headwinds for our core portfolio products. Volumes were weaker than anticipated, with a decline of 1% due to high competitive pressure.
Okay, Andrew went on to talk about, well, a whole lot more numbers, as CFOs do. We'll fast forward to when Pierre comes back on the call. And in really what was quite a gloomy call, at least Pierre had a little bit of sunshine as it related to FMC's R&D pipeline. As a spoiler, there could be some products that helped with herbicide-resistant weeds, particularly Palmer amaranth. Here's what Pierre had to say.
As we look ahead, the key driver of our growth and what differentiates us from the majority of other crop chemical providers is our R&D pipeline of new active ingredients. This pipeline is the result of years of dedicated work by our research and development teams, and it represents a significant competitive advantage for FMC. On slide 9, we have provided base sales expectation using the current targeted crops. But we believe there is substantial upside to sales through application on additional crops. Fluindapyr fungicide has been registered and launched in all major countries where we intend to sell, including the US and Brazil. Going forward, the focus will be on expanding sales through continued grower education. For Isoflex Active, we are already registered and selling in a number of countries. Sales are expected to increase in 2026, in particular due to a full growing season of sales in Great Britain following a delayed registration in 2025. Further growth is expected in 2027 following product registration in the EU. We remain on track to receive these important registrations as we recently received approval for the active ingredient last week. Dodhylex Active is the first new mode of action herbicide in over 30 years. We are confident that this herbicide can be useful in other crops like sugarcane and expect meaningful contribution from Dodhylex beginning in 2027. Finally, Rimisoxafen is expected to begin receiving registration in 2028. Rimisoxafen is the first herbicide ever to be classified as a dual mode of action. It is primarily targeted with Palmer amaranth and is now resistant to 8 herbicide classes. This pre-emergent herbicide will offer corn and soybean growers a new solution to an increasingly challenging problem. In addition to these 4 molecules, we have 2 more active ingredients in development. While we expect sales of these 2 active to begin during the early 2030s, their contribution is not included in the $2 billion of expected 2035 sales listed in the slide.
Okay, let's hear how FMC's investor relations team, led by Kurt Brooks, had Pierre wrap up the prepared remarks portion of this call.
In closing, we are committed to position FMC for long-term success. Our teams across the company are focused on executing our operational priorities with the same dedication and innovation that has always defined FMC. At the same time, we are undertaking a process to explore strategic alternatives. We believe that pursuing both paths simultaneously best position us to maximize value for shareholders.
Okay, you know how I feel about these earnings calls. The good stuff always comes in with the Q&A. And a question from Alexsey Yefremov, who we heard back on the Corteva call. Alexsey asked if anyone has already expressed interest and buying FMC? And maybe if this whole thing was just sparked by a specific buyout inquiry. Pierre handled that question.
No, what we've done, Alexsey, is a normal process. We worked with our board, and we presented to the board a business plan, which I have described, and that business plan includes $1 billion of reduction of our debt. That is part of the base plan, which also include improving the competitiveness of the core portfolio, the Rynaxypyr strategy, and the growth of actives. That's the base plan, which lead to a $700 million EBITDA target. Once we presented to the board, we also discussed, is there a way to increase shareholder return? Is there a way to maybe improve the growth of the sales of our new active ingredients and speed up the development process of the actives we have in development currently? And should we think about having our company operating under a different ownership, which could be beneficial to shareholders and which could be beneficial to the performance of our portfolio? That discussion with the board led us to say we need to pursue two paths. Path number one, the plan I presented to you. Path number two, an entire sale of the company. And for this, we are getting structured. We've hired advisors, bank and legal, and the process is being put in place right now.
Next up in the queue was Harry Stein from Wolfe Research. He pushed a little harder on Pierre. He said, what makes FMC confident in its 2027 numbers and its 2028 numbers? And what would a sale look like? Would it be asset sales only, or maybe just a full takeover?
The $1 billion of debt reduction, which is the sale of India, which is taking place. We are waiting for binding offers right now. The licensing of one of our new molecules, as well as other assets we have identified. This is going on with the basic plan. That is independent from the sale of the entire company. That's the base operating plan. On the side, there's another path, which is mostly focused on the entire sale of the company. And this is for the reason I said before, shareholder return, as well as potentially giving more potential for the company to operate in a better way. So the process of partial divestiture versus full divestiture are separate. One is taking place with the base plan. The other one is a separate process we are currently undertaking right now.
After these two questions, I bet Pierre was hoping there'd be no more follow-ups on that asset divestiture piece. Au contraire, my French friend. Vincent Andrews from Morgan Stanley followed up. He wants to know, more specifically, could FMC sell off some assets here and there, maybe sell some R&D assets, maybe do some licensing? Just give us a few more details, Pierre. What more can you tell us? Here's how Pierre handled that additional follow-up question.
I believe the company is set up in a way where multiple things could be happening. I would never say and never close any option which would be beneficial to the company and the way we operate, and which would be beneficial to shareholders. But from a probability level today, I think the two highest probability we have in front of us, one is the base plan, which include a licensing, a sale of asset, and the sale of India. The other one is the full sale of the company. There could be things in between, but right now, they are not part of the way we are thinking about the company. Obviously, if people come with interesting ideas about things we could do, we would listen. But right now, we are focusing on two paths as the principal actions we are taking.
Then the analyst backed off the whole, how are you going to sell off assets? Or are you just going to be completely taken over line of questioning? And Edlain Rodriguez from Mizhuno, you remember him from earlier in the show, in the Corteva call. He asked Pierre, how confident are you that you know what the challenges are moving forward? Pierre was quite upfront, quite transparent. He admitted there was one particular challenge that he underestimated. Maybe he might have misjudged when he came back as CEO in 2024.
It's a valid and it's a good question. And I'm going to answer that in a very, very straight manner. I think we've done a lot since I've been back in the company. There is one part which I missed. It is the risk we had to see a core portfolio outside of Rynaxypyr being as challenged as it's been by generic. And if you look at the performance of the company, we pretty much performed as expected in every aspect, except the core portfolio outside of Rynaxypyr. The problem is that it's a big part of the company. It's $2.2 billion. So just shrinking on this part of the company by 3%, 4% is a significant impact. I was not anticipating that the downturn would last that long and that there would be that amount of competitiveness in that part of the portfolio, especially in places like Latin America. I would have to do it again. I would have started the restructuring of a manufacturing footprint earlier. It is what it is. But if you look today at the portfolio of the company, the entire growth portfolio, the three parts, are in great shape and performing exactly as we're expecting. The Rynaxypyr branded strategy is clearly in place. We have one thing to fix. It's the core portfolio. We know how to do it. It's ongoing. The plan is in place and it's started. So why am I so confident? It's because the number of things we have to fix is limited. It's one thing. The rest, it's in place. The problem, this thing we have to fix, we better fix it because it's big. But it's not that complicated to know what we have to do.
All right, we're going to have to leave it there. We're right up against the end of the show. Huge development. FMC perhaps selling off assets, perhaps being part of a wholesale purchase. Perhaps they will be gobbled up by a completely separate entity moving forward. That's all the time we have this week. You can always catch this show or previous episodes by going to YouTube and looking up Farm Show Radio. You've been listening to The Farm Show on Westplex Talk 104.5 FM. We'll see you right back here next week at 10 a.m.